Welcome, everybody. I always try to give you guys 1 minute now because apparently I go too fast. So I'm trying to make sure that you guys have enough time to get in. All right. So welcome, everybody. We'll get cracking in 1 minute. We'll have a look at what's going on with the FOMC. Get yourselves in, guys. Welcome, everyone. All right. Welcome, everybody, to our live session. Let's get things cracking along. All right. So I'm going to kick off here. So it's been an interesting one. Okay. I think the market is definitely doing some things that are characteristic of coming into a FOMC news. But if you don't know what the FOMC news timing is or what is going to be, I'll quickly show you here. Let me go to FX Street so you guys can see. I've already been through this already, earlier on in the week. Let me put this up here so you guys can see. All right, so there isn't any high impact news on the market, but the market has been behaving today like as though there's high impact news taking place. It's been an interesting 2 days of, bullish activity. Now, from here, we can see we have Japan news and Asian news until 7 in the morning GMT. And here's the FOMC news. Now, this is important because the FOMC's economic projections are going to be in here. So if there's any sign of anything like a taper, maybe they might actually do a taper, even though they said they're not, or any hint that there may be an interest rate hike, that will send the market flying, okay? And cause the dollar to gain a lot of strength. Now, on the other side, we have the interest rate decision, which for now we all know, I think it's quite obvious that it's going to stay the same. I think it's extremely highly unlikely that the interest rates are going to change in a time like this. But you know what? You never know. But most likely we won't see any interest rate changes. So the monetary policy statement, and also 30 minutes after we have the FOMC press conference. So there's a lot of activity around this time at 7 o'clock. And I think you guys should all be aware of exactly what's going on there. So, saying that, I would definitely suggest, making sure you get tuned in. I'll be covering this live tomorrow, 7 GMT. All right. Definitely want to be on there. But this is the midweek news that is definitely going to move the market. And let's have a look into it and see what is happening so far. Now, I will pull up the FOMC news, the Federal Reserve. If I just type in the Fed, okay. Now, what I will do is I'll go through the previous results and we'll look at what we've had now. So monetary policy, okay, if you want to find out where it is, if you click on this and go to transcripts and other historic materials, you'll be able to find it. So this is what you click on. All right, and it's done by year. So if you click view transcripts by year, it has from 2000 and 1990, it goes all the way back into 1936. Literally, if you open 1936 here, you can actually see the historical minutes for 1936. Crazy, right? But anyway, this is the historic materials by year. The rest of it is on the front. But if you want to ever check out previous ones, you can do. I thought you might want to know that. But anyway, let's look at the monetary reports here. I want to see. So the past reports that we have here, the February, the testimony that we've had, and the current July report, for some reason, only the HTML one is available. But the main thing I want to go through is inflation. Okay. So inflation, consumer price index as measured at 12 months of using the change of the PCE price index moved up from 1.2% at the end of last year to 3.9%. Okay, so inflation has increased by quite a bit and up from 1.4% at the end of the last year. Some of the strength in the previous 12 months inflation readings reflects the comparison of current prices with prices that sank at the onset of the pandemic as households curtailed spending. All right, here's the key here. So spending was decreased. All right, this is what always happens. I told you guys last time, CPI, inflation, interest rates are all balancing tools that the central banks use. Every central bank uses to be able to control economic activity. And the transitionary rate of base effects. Now, more lasting but likely still temporary upward pressure on inflation has come from the prices of goods and services experiencing supply bottleneck, and the supply chain. So this is the key thing that I want to discuss. At the moment, guys, this is the economic environment that we're in, unfortunately. There are still supply issues. Not everything that the market is trying to supply is possible to get. Okay, this is one of the major things that I want to point out to you all. So if you are, looking to understand what's going on in the market, this is the major issue. The major issue is supply and demand of certain products. And supply and demand means export and imports for countries. And if that is affected, then GDP is affected and it creates a chain reaction. No matter how much new employment is there, okay, if the actual things are not there to be able to supply, then it's actually not really going to do anything for the market. So this is really one of the biggest things that is going on. So we've seen supply bottlenecks in things like motor vehicles and appliances. In addition, prices of some services such as airfares and lodging have moved up sharply in recent months, okay, toward normal levels as demand has recovered. So which means that, again, if the demand for vehicles, for stuff like airfares and lodging have recovered, then oil prices will go up over time, which we've discussed. All right, so both survey-based and market-based measures of long-term inflation expectations have risen since last year, largely reversing the downward drift in those measures in the recent years, and a large range that is broadly consistent with the FOMC's longer-run inflation objective of keeping inflation at 2%. Now, the history of why 2% is 2%, it literally comes from New Zealand starting out many, many years back. Before, over time, central banks have had to change their methods. Back in the days, in the 80s, all right, as I'm going back to the charts, we can discuss this. Back in the 80s, many central banks, okay, thought that having high inflation rates was the right way to go. So there was a time that New Zealand, I think in the 80s for sure, New Zealand had an interest rate of about 15 or 14%, so crazy high. Now, of course, inflation has its necessary, some parts which are good because it's good if you're holding that asset before the inflation, rises. When it does rise, you're going to make some, earnings on that inflation, nominally speaking anyway. So it is good for that. But then when the new government came into New Zealand, okay, this is history. You can go and check it out to verify if I'm telling the truth. After that period of time, the government said they want interest rates between 0.5 to 1%. So the then governor at the time decided that, okay, to do that, we need to make cuts everywhere. And so they came up with a target of about 2%, and then other central banks adopted it. I think the Federal Reserve was probably one of the last to adopt it, which might be interesting to you. But in essence, after a while, every central bank kind of follows suit, and now it's become basically the kind of baseline figure that everybody uses. So there isn't really, there is maths behind it, but it isn't really like some major figure. It's kind of like if one central bank does it, then the others do. And that's basically what happens, starting out from New Zealand. So coming back to the charts, every central bank at the moment is aiming to keep inflation at 2%, okay? And then in order for them to do that, then other figures need to be in place to support that, because inflation, if you want to put it that in another way, you can put inflation as the tax that the central bank earns, because inflation means that potentially you lose value on the currency you're holding every year. if the interest rates are lower than the inflation. So if they keep at 2%, then that's how much. If you hold your wealth in that currency every year, you're basically giving them money in a sense. So I'm saying that to say at the moment, with what we've got going on in the market now, I am on this live chart right now. I'm in two positions on what's it called, on USDCHF, which I believe is going to give us a long. I haven't changed my mind about it, and the reason why, speaking about what we have going on, is remember, guys, when we discussed this was our major area of supply until the price broke past it. It is a demand zone by nature, but we had a demand zone reversal up here. The price dropped beneath here. We had this price because it was a demand zone before, and now the price is using it for supply. We've had the price selling off from this region, but the market was still making higher highs until when we took the long down here. On Friday, we had a surprising close above this zone. So we've had a close and a return back to the other side, which was the trigger for why I put on two positions long here. Now my stop losses are not on, and that's not correct to some, but the only reason why my stop losses are wide is because I am in profit. And the risk that I have is very low in comparison to the size of account that I have. So this is the only time you see me without a stop loss. I want to repeat, I do not ever trade without a stop loss. This is temporary until the market volatility comes down to a certain degree. But ideally, my stop losses are going really beneath here. So I'll put them here just so that I keep it level with you guys. But what we need right now, the price has spiked into the demand zone that was triggering most of the price action that we saw from back in July all the way down to August. Now, most likely the price will close inside of this area by the end of the day. Well, that's the expectation. But what I want to see is just to make sure, and I'm going to put this here, we don't want a situation where if the body of the candle of this day closes beneath this gray area, then I will come out of my position. Okay. Or if it closes within this region though, but it closes outside of the area, then I still will hold. Okay. Because you can see we have a supply zone that the price was using many times in tandem with the short. The price has spiked to the other side now. So this should be the trigger to give us the long, and I'm expecting the price to give us a very nice long all the way up to here. And then I'll be out, because personally, where the price is, this reversal signature, the price comes back to the order blocks in this range of price, then it might cause for us to have another short. Because I said to you that there is market inefficiency on the short side, and that short side inefficiency will take the price. I'm going to leave it right here. Will take us back down to right here before another long. So if this is the case, this is the two positions that I'm looking for. So on the long side and on the short side, I'm quite comfortable with my positions, to be fair. And I'll allow the price to do what it needs to do in order for us to get the job done. Now, looking at the rest of the market here, there are quite a few things moving forward. I've seen NZD-USD. Now, NZD-USD had this signature for a long, but again, even though we had the signature for the long, we had a body close beneath here. So reoptimization of the zone has now become an area for selling. And this is what really we're aiming to go for when it comes to NZD-USD here. So I am in the short on a very tiny account, and I expect the price to continue in that manner. The price is doing what it needs to do. Let me just go over and see what we have here. Now, in terms of my projections for tomorrow, I do think we're going to see short-term a bullish dollar, okay, and then a bearish reaction straight after. Now, depending on how can I put this? So for me, on this account, I do know that we need to see a long on the dollar. Now, according to what we have with the data so far, okay, there is recovery taking place in the US. And if you've seen the news recently, the US has just completely opened up the borders again to people who are fully vaccinated, which means that more money is going to be generated in the US, more activity is going to be generated. But we won't see those figures coming into tomorrow. But the figures tomorrow will probably be alluding to what we're seeing right now. Remember, when the central bank is giving out information about data and topics, there is always going to be a delay between what's happening right now. So, for example, if I don't know, something amazing happened in the US, we won't see that news. Or something, let's say there was a massive spike in employment, easy one. this month, we won't see the results of this until next month because it has to be tabulated first. Okay. Even if I guess from the raw preliminaries, people who are taking in the data can tell, Federal Reserve can tell that, wow, it's increased. But until the details are officially published by, the US Labor Bureau, for example, you won't know, but you can tell. So what do you do in the meantime? You have to follow the price because the price is more sensitive to these small changes. When fundamental news comes out, it reacts to that. So for me, from a technical standpoint, I can see the dollar having some more strength on it for a little bit longer until I wouldn't say for the long term, but just until this point right here on the upside, and then we'll see a short. So as we gave the technical analysis this week, now if you haven't seen our weekly breakdown, please go and check it out. All right, our weekly breakdown is available Sunday night, Monday morning, GMT time, around about 12 midnight, somewhere around that time. Okay, we will receive some really nice breakdowns for the market. So I've done on that breakdown, that was me. I did USDCHF, Pound USD, USD Japanese Yen, Euro USD, AUD USD, and USD CAD. All right. So really what I'm doing right now is just recapping. So if you're kind of lost as to what I'm talking about right now, I would say take the time and definitely go and watch out that video to see what's happening over there. So moving forward here, so we've seen a reversal take place on Pound USD. The market on my account anyway has opened up with a gap here, which needs to be filled out. We've seen a very strong short at the beginning of the week. But then at the same time, as I was saying earlier on, my only issue with this movement is that we have no return to supply here as the price was dropping. So I'm expecting Pound USD at one point or another to come back with a very strong long. But when it's going to do that is the question. At the moment, in terms of distance, it will take the market. Now, remember, every time the market moves long or short, it requires money to move the market long or short. So for me, this distance right here is 204 pips to get back to this area. But there are some lows here on the weekly. So weekly lows right here. So if I'm on the H4, so from one line to the other represents a week. Here we go. The weekly lows all the way back down here, which are not too far away, and would have some sort of stop loss orders around them. So it's only about 91 pips away. So to me, when I look at this market on Pound USD, it'll be a lot easier for the price to go for the lows than for the highs. But there is a gap here denoting to the price wanting to definitely fill that gap later on. So the question is we want to look for is how is this going to play out? So if I could give my 2 cents on here, at the moment, the price is interacting with the low. We have a double bottom forming right here. And because there's a double bottom forming, the price may decide to reverse long because a lot of retail traders will be going for that pattern. If not, the price may just continue going forward for a short. But from the looks of what we have here, I believe the price is still bearish. And even though I know there is a gap on the market, I don't see that the market is ready to fill that just yet. And this is what I'm alluding to when I'm talking now is that, even though, okay, for example, with USDCHF, I'm expecting a long to happen. If this long happens before the news happens, guys, because that can happen too. So if the price hits this target and then by the time we get close to the news, it's here, I would open a sell and get out of the long, okay? That's one thing I want to say as well. So I am watching this carefully. I'm still confident that the price is going to go long. We may get a little spike lower than a touch back up, but in reality, I expect the price to definitely do a very strong long. And so I'm keeping my wits about me when it comes to USDCHF. So if I were you guys and you're looking at positions, be careful when it comes to the news, what you do with it, because the price can really, reverse very strongly during these FOMC periods. All right. But I'm just hanging in there. The market liquidity is kind of drying up for now. But if we want to go for a trade, I'll say Pound USD for a short than a long would make more sense, economically speaking, and on the way up to fill out this. Now, let's see what happens. At the moment, there's not much I could say because the price is still kind of making lower lows in some places on some pairs. So we've got to strike a balance. So yeah, scanning through that though, it's been an interesting week in the market, and CAD pairs have done really, really well. I want to see how the price plays out. We've had a lot of spiking above highs across many pairs. I can go to pound CAD. Pound CAD is pretty similar as well. Pound CAD has actually experienced quite a strong pullback short, but I do expect the price to pull back here and give us a deeper short. But again, we're seeing the same kind of thing here. And there is hope for the price to go short. I don't want to push it too much, but tomorrow is going to be everything. So I'll be on live. I might even be live earlier. Who knows? But for now, guys, with what I have here and what we've been discussing, I would say please go back to the Sunday night session, Monday weekly breakdown, and let's see what happens in the market. So I hope you guys enjoyed that. Then I'll catch you guys soon. Take care.